All right. Well, good evening, everyone, and welcome to Stress-Free Tax Season, a webinar hosted by Premier America Credit Union. Thank you all for spending an hour of your Wednesday night with us. And just a quick note, this webinar is being recorded. So if you miss anything, don't worry, we'll share the recording with you afterwards. My name is Francesca, and I'll be your moderator for tonight's session. And before we dive in, let's just cover a few housekeeping items. So everyone's mics are muted for this session, but we'd love to hear from you in the chat. Feel free to ask questions anytime. We'll have a Q&A session at the end to address any questions that might not be covered during the presentation. And be sure to stick around until the end for helpful resources and links to make tax season a little easier. And we'll also send everything mentioned during the presentation to the email you used to register, so keep an eye out for that in the coming days. All right, now let's get started with some introductions. As I mentioned, I'm Francesca, the Community Relations and Event Specialist for Premier America Credit Union, and I'll be the moderator tonight. And your presenter is Alfredo Martinez, our Financial Inclusion and Education Officer. Alfredo is an accredited financial counselor through the Association for Financial Counseling and Planning Education, and has over 6 years of experience in the financial services industry as a financial educator. And with that, I'll hand things over to Alfredo.
Thank you so much, Francesca. Good afternoon, good evening, and if you're catching this at a later time, hello, welcome. We have a great conversation today, stress-free tax season. What some tips, some things that we're going to be covering today is how we can navigate this tax season. So we have a really good conversation. Please, we do have a Q&A at the end. However, our moderator, thank you, Francesca, will be keeping an eye on the chat. So if there's anything pressing, anything on your mind, anything that the content inspires, please feel free to ask, as it will be communicated that way. I did also just want to really quickly just add that this information and content provided here in general nature is for informational purposes only. And it's not intended and should not be construed as a specific recommendation, individualized tax, legal, or investment advice, as tax laws are subject to change either prospectively or retroactively. So tonight's conversation is just providing some good tips, some good information on taxes and trying to navigate it as stress-free as possible. So welcome again. I hope everybody has had some dinner, if not chowing down right now. Let's kick off this conversation. Let's get going. Next slide, please. Thank you so much. All righty, so understanding the basics of tax filing. Let's start with the essentials. So let's talk a little bit about that. Filing your taxes can feel overwhelming, but we're here to break it down for you. So in this section, we'll cover some key deadlines to remember, some common tax forms and what they mean, how to make sense of your tax documents so you can file with confidence. Often not, when we see these tax documents, there's a lot of numbers on them, right? Like the IRS likes to codify everything. So we're going to be breaking that down to give you a better sense of what this information is, and so you know how to best navigate this tax season. Next slide, please. Awesome. So let's start off with one of the most important things here is the key tax deadlines that you can't miss. So you definitely want to mark your calendar, making sure that you have all your tax documents in order, just to avoid any penalties or late fees. So tax day 2025 typically lands on April 15th year over year. There are different instances where that can change, or different deadlines are available, or extensions, if you will. So that's the tax day this year, April 15th, 2025. You definitely want to put that on your calendar, mark this to do. What I like to personally do is put like a 1 week reminder, a 2 week reminder, just to kind of make sure that if I do forget, which, life happens, you have that reminder there. And for any specific instances where you have an extension deadline, that would be on October 15th, 2025. So remember, if you file for an extension, payments are still due by April 15th. And for anybody on the call, I just really want to quickly call out that there are special circumstances involving natural disasters where the IRS is a little bit more lenient. So please keep that in mind. If you were affected, there are different resources available, as well as different deadlines available to you. But that April 15th, 2025 date is definitely something that you want to mark on your calendar. Next slide, please. Awesome. So let's break this down a little bit. Some tax forms and demystifying these common forms. So what do all these tax forms mean? So we're going to break these down by different types of employment. Let's talk about the most commonly used here in the United States, which is W-2. So these are for employees, report your wages and tax withholdings. And so typically speaking, your employer will deliver this on your behalf, but then on your end, you have to report this as well. So the W-2, and for most instances, if you are a W-2 um, employee, you have already received this document. And if you haven't, some employers offer it through their human resources department or through different types of systems and forms. So if you haven't gotten that, you definitely want to make sure that you have. So this another way you can think about this is a way that maybe I got to develop a checklist, whether it's a W-2 or 1099, a 1040 or 1098. And so let's just kind of break these down. The 1099 is for freelance contractors or those with sources with other sources of income. So this could be somebody who maybe has a side gig or works as a sole proprietor, if you will. And so it's very important to understand how you will essentially represent yourself to the IRS. The W-2 will be given to you if you happen to fall in that category, but if you happen to have some income through maybe a side gig or through another form. A 1099 is for those contractors where you can self-report this income. So this is a lot of for those, like I had mentioned, those sole proprietors who have their own businesses and make money through a less traditional mean, if you will. The 1040 is very important because that's a standard individual tax return form. So that's the form that you fill out. All of the boxes that are there from 1 to 18 or 19. You essentially match your W-2 or your 1099 and you put it on the 1040. So the 1040 is typically what you find. There are some special instances where you may use a 1040 EZ or things of that nature. But generally speaking, most adults, working adults, use the 1040 to file their tax return with their with the IRS, and you can use that to then do that per state. It's a little bit different. There's different forms, so I don't have all of those memorized, but the 1040 is for federal income tax. You would use that document. Very important for our homeowners out there and those who receive interest. You have different documents like the 1098, so it reports the mortgage interest that you have paid for potential deductions, which we'll dive into deductions a little bit down the road, but these are important documents that you need to have. And I think that's the key message here is what documents do I expect to receive and which ones are missing or which ones will I need. By this time, for anybody that's on the call or listening in, you have already maybe gone through several tax seasons, and so you already have a general idea of what it is to expect, and what you're going to be receiving this tax season. So keep in mind that these documents will be coming to you, and you also have access to these documents through your human resources or other areas or departments. Awesome. I know it's quite a lot, so feel free to stop me at any point. But if not, we're just going to continue on to get to the meat and the bones of a stress-free tax season. Next slide. Okay, so one of the most common questions that I've run into in talking to different people, especially younger people who are maybe doing taxes for the first time, is, whether you're a DIYer or you have a tax professional that you go to, often now we get asked, are you doing the standard deduction versus the itemized deduction? And so which one is right for you? So let's talk about this for a second. So for the standard deduction in 2024, the tax year, if you're single, it's 14,600. If you're married, filing jointly, it's 29,200. And if you're head of household, you're 21,900. So let me just break down standard deduction to the best of my ability. So the IRS recognizes that, if we were to tax 100% of your income, that might be quite challenging on you and might strain you financially. So the IRS allows individuals to take a standard deduction or an itemized deduction. But what the standard deduction essentially says is that if you're a single individual, we won't tax the first $14,600 as an example. And if you're married filing jointly, we're not going to tax the first 29,200 of your income in that sense. So the idea is that this allows you to pay less in taxes and kind of support you in that regard. The reason why there's this conversation between a standard or an itemized deduction is that if you're itemizing means that you have deductions that exceed the standard amount. So if you were to itemize all of these deductions that you have, so if you were to, for example, pay mortgage interest, if you had charitable donations, medical expenses, different types of deductions that you can qualify for, and it exceeds in the event that you are a single individual, it exceeds 14,600, you'd be better off doing the itemized deduction because that itemized total may be closer to 20,000, 25,000, which will essentially lower your tax liability, which you owe to the IRS or the federal government, ultimately putting more dollars back into your pocket. And so I know that was quite a lot there, but the idea really is, you know, if I don't have that many qualifications for deductions, generally speaking, most folks go with the standard deduction. But if you are one of those individuals that does qualify because of maybe the mortgage interest that you paid or medical expenses and charitable donations, then itemizing would probably be a better option for you. And if that still seems, kind of vague and difficult to understand because you may fall into the itemized area, you might be better off speaking to a tax professional, and they'll be able to break down your specific financial profile to determine, is a standard deduction better for me or is an itemized deduction for myself. So something to consider as you kind of navigate that conversation for yourself or for your family. And so really quickly, I forgot to mention the head of household here. So in 2024, the tax year of the head of household is 21,900. And so that head of household has different implications. That means that you may have a dependent, and so you may be caring for somebody in your household, which has special requirements to qualify for head of household. So, things to consider. You still qualify for that standard deduction, but it's a little bit more than you would as a single individual, as you are as you have a dependent that you are a caretaker for, as an example. So I know taxes can be quite tough. It's one of those things that we often don't get taught or we learn on our own as we just kind of navigate adulthood, if you will. And if you're fortunate enough to have somebody in your family to kind of go over this with you, that's great. But still, having a better understanding of taxes and in how we pay into them can ultimately make you more financially capable and allow you to leverage decision making that best benefits you. So, in a nutshell, standard deductions, you're up to the 14,600 for a single individual in the 2024 tax year is untaxed. And if you fall in that itemized area, you may be able to put more money in your pocket. So, you know, that's the standard versus itemized deductions there. I think I did see something come in the chat. I'm head of household, but my son still lives with me, 22 years old, and doesn't pay rent or bills, so I can claim him rights. That's a very good question. I'm not well versed in the head of household. I know that as I did volunteer 2 years ago to become a volunteer income tax assistant to help a VITA site. Um, there is a certain time requirement where the dependent has to live with you, as well as other certain requirements. I don't have that quite in front of me just now, but let me see if we can get an answer for you. And if not, the best person would ask would be your tax preparer, as these things tend to change year over year. So I appreciate that. We'll hold on to that and see if we can get a better answer for you. Next slide, please. Awesome. So maximizing your deductions and credits, save more with deduction and credits. So let's talk a little bit more about the deduction pieces. And I appreciate all the comments and the questions coming in. We'll see what we can do towards the end and see if we can get some more clear answers for you. But first, let's tackle this really quick. So let's talk a little bit about deductions. The idea really here is the name of the game is not tax. Not tax evasion, but tax avoidance. So that's a common conversation that I have with a lot of folks, especially younger people. Is tax evasion bad or is tax evasion good? Well, the nutshell there is that tax evasion is actually illegal, but tax avoidance is completely legal and a strategy that a lot of folks use. So the idea there is that you can leverage deductions and credits to save more, ultimately reducing your tax liability. The idea with tax avoidance is that you leverage certain strategies and techniques to reduce your taxable income. So the example here is if you make $60,000 and claim 5,000 in deductions, you only be taxed $55,000. And on top of that, if you were to take a standard deduction, as we learned in the previous slide, you would even reduce that number from that amount. So again, this is a strategy that a lot of tax preparers and tax professionals help you with. The idea is that, all right, as an example, they say, Alfredo, thank you for walking in today. All right, let's talk about your taxes and see how we can save you the most money. What they're doing is not what we call tax evasion, but what they're doing is what we call tax avoidance, to helping you reduce your taxable income, ultimately, as I had mentioned, putting more money in your pocket. So that also applies to different types of credits. There's quite a variety of credits out there available to help everyday folk. The idea there is that you reduce the tax that you owe. So for an example, if you owe $2,000 in taxes and qualify for $1,000 credit, you only owe 1,000. So some of the credits that are available out there, one of the most widely known is because you have a child care credit is typically one of the most commonly used. There are other types of credits available. For example, if you're a student and you are studying and you have educational expenses, there's different types of credits available as well in that regard. So the real idea behind this is that as you kind of level up your tax scheme, if you will, is how can I pay less taxes as I file my taxes? And this is a conversation that a lot of folks need to have more on a one-on-one setting, because a lot of personal information is shared, a lot of more personal financials are being shared, but the name of the game here is using deductions and credits to ultimately put more money in your pocket. And again, as I had mentioned a little bit earlier, this is not what we call tax evasion. This is what we call tax avoidance, reducing your tax liability or taxable income. So at the end of the day, you have more to take home for yourself, for your family, for those that you care and love. So deductions and credits. Awesome. Let's go ahead and we'll go on to the next slide. I see a couple comments coming in here. Let me just take a quick pause and see what we're thinking and we're feeling here. So they're a single and sole proprietor as well. So in that case, you would file the appropriate form, which would be the 1099. Do undergrad international students working on campus need to file taxes? That's a great question. There's a lot to unpack there that I want to answer. I'll give you a quick, short response to that. I there do undergrad international students working on campus need to file? If you're making income, chances are you're already paying. Taxes are being pulled out of your paycheck there, so you would want to file taxes. That would be a great opportunity to file if you're an international student for what we call an individual taxation identification number, or short is ITIN, which allows you to then access the mainstream financial systems. But we'll go ahead and that's as far as I'll go for that question, because there's a lot more I want to talk about, and we'll save that for the end. So I appreciate that question. Let's see here. I'm an international student and an account holder of your bank. I have income from a campus job. My paycheck was similar question came in. So we have a couple international students on the call today. Yes, we'll break that down a little bit more towards the end. And how can I came back to so we'll go ahead and talk a little bit more about that at the end of the conversation. So I appreciate that. And thank you so much, Francesca. She put in the chat here, the IRS has a list of 5 criteria to claim a dependent. This is based on the relationship, age, residency, amount of financial support you provide, and how you file. So appreciate you sending that link in there. Super helpful. And let's go ahead and talk about that. So we'll go ahead and continue to see the comments coming in. If the questions are a little bit too where I need to expand much more, we'll wait till the end for the sake of the presentation here. So let's move forward here. Common deductions and credits. These are key ways to reduce your tax burden. As I was mentioning, that tax burden is another word for tax liability. So let's talk about this common deduction. So mortgage interest, student loan interest, and medical expenses. So this definitely applies to most folks. If you happen to be a homeowner, you get that document at the end of the year, usually by your financial institution whom you have that mortgage with. They're going to send you that document to show the IRS how much in interest that you paid, which can ultimately help you save money. So if you more or less, you may have already received that now, as generally these documents get sent early February, mid-February at the latest. So if you haven't received it, it's probably either in the mail, or I would reach out to your mortgage loan provider to help you support with those documents. This is similar to what student loan interest, whether you're using a federal program or a private loan provider. Similar situation. Those documents get sent out relatively late January or early February, so they may be with you now or in the mail. But as we're already in the first week of March, that should be the case. And as well as medical expenses, the medical providers will give you those documents as well. And so this is just a long way of saying that these deductions help you reduce that tax liability and tax burden. Again, name of the game is paying less taxes, right? So let's move on to common credits. I talked a little bit about the most common, which is the child tax credit. So it's up to 2,000 per child under $17. And so this is something that's common for a lot of families out there, young families who have younger children. Um, Typically, this gets applied very easily, very quickly, whether you're a do-it-yourself through maybe some online software, or if you go into a brick and mortar store, they definitely ask you about your family situation. And where it does get a little interesting is that if you're separated, and who's claiming the child as a dependent and things of that nature. But again, I'll refer to your specific tax professional to better assist you with that. And so moving on to another common credit is the earned income tax credit. So these are for individuals who may qualify, or for the lower income side for their families. And so every year the IRS designates a certain amount of income that if you make, and you fall under that, if you fall within that bracket, you may qualify for the earned income tax credit. So this is again the IRS as a way to help support those individuals that may not have the means, traditional means. And so it's an additional way to help individuals. As I had mentioned earlier, is education credits. There's quite a few right here. So one of them, a couple that we called out here, is the America Opportunity Credit. So this is up to 2,500 per student. Something that you definitely want to ask your tax professional for as far as the qualification criteria for this. And furthermore, the Lifetime Learning Credit, which is up to 2,000 per year, and there's no limit on years claimed. So one of the key things here that I want to talk about is, which best applies to me. And of course, it's hard to give the straight answer on this, just because we don't know your personal tax situations. I will also just quickly add, be mindful as you put information in the chat, whether it's personal or whatnot. Just know that other folks potentially can see this, so just be mindful, and keep that in mind as we kind of continue this conversation. So. And I continue to see that my the moderator here, Francesca, thank you so much for putting in these comments here, and putting these links in here to help self-help these individuals with these kind of questions, and we'll tackle a bit more towards the end. And so when you have a chance, if you can just move forward to the next slide, please. Awesome. So retirement contributions and benefits, another important piece that often gets asked when it's tax time is how can we use retirement contributions and benefits to reduce our tax liability? Again, the name of the game is to pay less. So 401ks, which is more of the more commonly used employment retirement sponsored accounts, is a fancy way of saying it. But most employees in the United States use 401ks to help lower their taxable income. So this changed in the late 80s, if I'm not mistaken, from pension plans to 401ks. And the idea here is that if we contribute to a retirement account, if your employer offers a 401k or a 403b or 457, and again, the IRS loves these numbers. They use numbers as a way to differentiate the tax code, hence the why that's the 401k, the 403b, and the 457. But the idea really here is that if you contribute to these accounts, and if you use it in a traditional sense, from your paycheck, it is what we call tax deferred. So it doesn't mean that you won't pay taxes, which is a common misconception for a lot of individuals that do contribute is, I'm contributing to my 401k, so I won't pay taxes. Well, actually, you'll pay taxes eventually, usually in the future when you start taking when you when you retire as an example, you'll have what we call required minimum distributions. So when you start taking those distributions from a retirement account, it will be taxed. But there's a lot more to unpack there. But I'll quickly just want to talk about house savings accounts. This is a great way to allow tax-free withdrawals for qualified medical expenses. So if you're an individual that uh, maybe has some health issues or would like to be proactive, because a lot of things qualify to purchase items and use the house savings account. So for example, if your child and your family requires orthodontic care or different type of care, there's a lot of qualified expenses for health savings accounts. And so the idea with health savings accounts is that you take a portion of your income and you contribute that out of your paycheck to this savings account, and it is what we call tax free. So the idea is that you can actually use money to help pay for health and medical expenses without paying taxes on it. There are limits to these. There are annual limits to the 401k, to the house savings account. So it's not that there's an unlimited amount of money that you can put into these accounts. There are annual limit contributions. I don't want to be mistaken, but it's for the 401ks, it's close to 23,000, if I'm not mistaken. I don't have the number on top of my head. And the HSAs is a lot lower, closer to five. Please don't quote me on that. But just to give you a general sense of how you can leverage these benefits and retirement contributions to reduce your tax liability. I hope that made a lot of sense. If there are any questions you'd like me to dive deeper, just let me know in the comments in the chat, and we'll tackle this a little bit later towards the end of the presentation. Next slide, please. Awesome. So let's change gears a little bit and get away from reducing our tax liability and talking about tax mistakes and how certain things can kind of hurt us maybe. So we're calling this staying ahead of the game. So in that deadline, it can be problematic for your situation if you're filing later, missing deadlines. Even if you can't pay, always file on time to avoid those additional penalties. The IRS has different types of payment plans that can assist you. And there's different ways that you can navigate and manage that. One of the common things that I often talk about is, getting in front of it. Sometimes if we do make mistakes or if we know that we can't meet certain deadlines, get in front of it, have those conversations, reach out to your tax professional and see what ways you can take right now to be proactive, to avoid those mistakes and ultimately those penalties that can cost us, time and money. Um, Getting into contact with the IRS and handling your IRS challenges it can be quite draining, quite stressful. And remember, the key message today is, reducing that stress, that tax-free or I'm sorry, stress-free tax season, but also reducing the amount of money and putting more money in your pocket, right? One other area where a lot of folks make mistakes, especially for the DIYers, the do-it-yourselfers, is the incorrect tax bracket calculation. So remember, only income within each bracket is taxed at a higher rate. And so, in other words, the United States for federal income tax has a progressive nature. So what that means that only a certain percentage of certain income gets taxed at a certain rate. I know I said certain a lot there, and can be quite confusing, but the idea is that a certain dollar amount, and if I'm not mistaken, it's upwards to like the first 10,000 and change gets charged at a certain rate, and then from that number up to 22 to 23,000 gets charged at a certain rate. So that's what I mean by a progressive nature, is that the idea is that a certain amount of income is only taxed at a certain percentage to help again individuals, and that is the progressive nature of federal income tax. Conversely, there's also what we call a regressive nature in other taxes, but we're strictly focusing on income tax today, and so that's the progressive nature of federal income tax. Let's talk about forgetting deductions or credits. So keep those receipts and use tax software or a tax professional to ensure you don't miss anything. So that's another common mistake, especially for the DIYers. Nowadays, there's a lot of softwares out there that will essentially do this, help you do it, and guide you through this process. But be mindful of that because they typically charge, and it's hard. It's kind of easy for some of these things to kind of slip by. And so if you find yourself, especially for the if there's any young people on the call and you have maybe doing this the first time by yourself, I highly recommend more of an in-person before you go down the do-it-yourself path, just to make sure that you're not missing these deductions or credits. Because again, this is money that can be coming back to you. And so it's really important that you keep that in mind. I saw that there's some students on the call. I'm not sure what school you're from, but if I were to make an educated guess, I'm thinking CSUN here. CSUN has a VITA program, Volunteer Income Tax Assistance, which I'll talk a little bit more down the road in our Q&A section. But Volunteer Income Tax Assistance Centers and these programs are great resources for especially for younger folks, which I'll talk a little bit more. Yeah, I got that confirmation. So thank you to our students here that are listening in and want to get ahead of the game and learn a couple tips when it comes to taxes. I appreciate you all. Next slide, please. All right, so I feel like I've already kind of spoken a little bit about this. A DIY or hire a professional. I'm curious if you feel more if you're up to it in the chat in the feel free to just put you're a DIYer or do you usually work with somebody? I would appreciate that. I saw another comment here. CSU Dominguez Hills has a program called VITA. Absolutely, absolutely. So very good. Oops, I'm seeing. Okay, here we are. Yeah. So if DIY now, okay, I see some DIYers now. You say now, so you probably started with a tax professional before. And I feel like that's a general transition for a lot of adults, is we typically start off with somebody helping us. And then as we kind of learn, about taxes and tax basics, and you may graduate to becoming a do-it-yourselfer, which is fantastic. But really, the choice is yours. Do it yourself is best for simple returns with W-2 income and a few deductions. So if you are a younger person, or if you're just you strongly believe in doing it yourself, this is ideal for individuals with simple tax returns, like a simple just one or two W-2s, and doesn't have a complicated tax profile. Like for example, you made money in a different state, you have properties in other areas. Maybe you had gains from investments or even from gambling winnings as an example. As if your tax profile becomes more complicated, you may be best speaking to a professional, just because you don't want to run into any challenges down the road with the IRS. Just kind of my 2 cents on that. As I had called out, there are a lot of popular software options, including TurboTax, H&R Block, and Free File from the IRS. And I just really want to quickly call that out, that the IRS has a free file from their website, and most states, if I'm not mistaken, I live in the state of California, and California also has a free file to file the California taxes. So most states and and I know the federal government and the IRS offers this at no cost, but again, this is best for individuals with simple returns, unless you have years of experience filing taxes, or you've have several years of experience, understanding your tax profile, and you have the confidence to do that yourself. Some other options, a professional would be hiring a CPA, which is a certified public accountant, or a tax preparer. So as Ed mentioned, these are best for complex situations, like if you do have self-employment, investments, or owning a small business, where you want somebody to kind of help you with this conversation and making sure that you do the best that you can, just because you don't want to find yourself in a situation where the IRS sends you a letter saying, hey, there's a couple things here that we need to talk through and figure out, just so you don't find yourself in that position. So again, the choice is really yours, but just know that if you do want to do it yourself, you don't necessarily have to pay, if you will. The free file from the IRS is available, and I know at least in the state of California that offers the free file as well, and I would be confident saying that most states do. So I'm going to take a quick pause here, and I'm just going to see what the chat has here. So DIY now, I'm a DIYer. I paid really good attention to my tax guy who retired, unfortunately. Fantastic. So you picked up as you kind of learned. I see here, I usually work with someone, but they are not available anymore. I used H&R Block last time, but they charge so much, I can't afford it. Yeah, that's the reality is that, which I'll talk a little bit more towards the end, that some of these services can be quite costly. And so I'm going to talk about some resources available towards the end. Let's see here. I've been getting assistance from a tax preparer for over 10 years now, and I'm really satisfied with the service. Fantastic. It's one of those things where you know at during tax season if you've been with somebody for so long and they can help you, and it's just a huge burden off your shoulders. I completely agree with that. Is that all for forms? Yes, at the moment, yes. If even though it's a free file, you have to know what to deduct. Absolutely, well said. And this is what I was meaning about, if you are a DIYer, if you're just starting off, I would recommend seeing a professional first, so you familiarize yourself with those deductions, those credits that do apply to your financial situation, right? As you gain that confidence, then maybe you can go down that path. Uh, Expensive, I can afford them. I have back taxes them. I see. Awesome, awesome. Yes, so let's go ahead and talk about that. Let's go ahead into the next slide. Thank you for everybody that's being lively in the chats. A lot of great comments. I do want to spend a quick moment to talk about this because unfortunately, we do hear about this in our community at times. Is some tax scams happening? Whenever it involves money, there's money to be made, and there's individuals and predators out there willing to take advantage of individuals who may not be as familiar with these systems or with taxes in general. So here are just some general tips about something to protect yourself from fraud. Is watch out for too good to be true refund promises. If somebody is speaking to you and saying they can refund you a certain amount, or, if their selling point is that I can get you the best refund, I hope that your red flags, and your guts tell you something, because that is definitely something to be mindful of. Most professionals don't go out making promises because they may not know you or may not know your specific tax profile, and so that should be the first red flag and the first idea that, hey, maybe this is not true. And again, I think most folks can, have that gut feeling when something's a little bit off. So, of course, you can always go to your financial institution. We can definitely connect you and pair you to professionals that can assist you with this. Something else to consider here is to never share personal information with unsolicited calls or emails claiming to be the IRS. So this is something that happens quite often, is that there'll be individuals or scammers that claim to be the IRS emailing you and calling you. They will not email you or call you. Only there's one caveat to that. If you have already been working with the IRS, like if you've seen their representatives, and you have a pre-existing relationship, then obviously that's a little bit different. But no, they won't. They'll typically mail you physical mail, and it's on IRS letters, and it's pretty certified. And they usually ask you to go into one of their local offices to conduct any type of business that you have. So just be very mindful of that. I also really want to quickly talk about that all tax professionals, and when I say all, I mean those who have gone through the right procedures and have gone through the right uh, methods to become tax professionals, have a license, and are usually a license that's backed by the state or checked by the state. So here's an important tool that you could use to verify somebody's tax professional if they're claiming to be a tax professional. So if you Google CTEC verification tool in Google, you can ensure if you're working with a certified professional. There you would put simply their name. If they do claim to have a tax professional, they should usually have an ID number or a license number, and you can verify whether what they're telling you is correct or not. And furthermore, you can even learn or know if there have been penalized by the IRS for any way, whether they're not conducting good business practices, or if they have made errors in past files and file returns. So this is a great tool to help yourself engage with an individual that you feel confident that they are certified, they have gone through the proper measures and education and training. So that's a great tool to have in your back pocket if you are looking for a new tax professional, or if maybe you just want to dive into the history a little bit about the tax professional you're working with. Next slide, please. Alrighty, so planning ahead for next year. So let's say, you're in that situation where you're about ready to file your taxes and you're feeling pretty good about it. And maybe you want to start thinking about the next year. So this is typically for individuals that maybe have already gone through a few or several or a lot tax seasons, if you will. Some things to think about, adjusting and withholding. So if you do happen to be a W-2 employee, you can actually use the IRS withholding calculator to adjust your W-4 and avoid overpaying throughout the year. So this is a very important tool, but this is definitely more, I would say, on the advanced side of when it comes to DIY taxes, if you will, because adjusting withholding essentially says, I have a really good idea of how much I need to pay in taxes, and so I'm gonna essentially tell my employer to only deduct a certain amount. And so the idea right here is that you have a really good understanding of what it is that you'll be paying. And so you won't have to overpay throughout the year. You'll probably break even as you file taxes in the following year. But just know that a word of caution with adjusting any withholding is that if it's done incorrectly, you may end up owing taxes, which is not in a position you want to be. So again, you can use the IRS withholding calculator to help you with that, or you can have that conversation with a tax professional. But just be very mindful with adjusting withholding just so you don't find yourself on the opposite end of where you want it to be, if that makes sense. All right, estimated tax payments. So these are individuals for self-employed should pay estimated taxes quarterly. So this is another really good tip. I did see that there was a couple self-employed individuals on the line today, and so one way to kind of minimize the big tax bill at the end of the year, because nobody wants to, hand out a boatload of money at the end of the year, you can kind of hold yourself accountable for the self-employed, and you can conduct yourself on a quarterly basis. So if it's April, June, September, and January, to limit the amount of taxes that you pay in one lump sum, which can be in certain times over $10,000. And so keep that in mind that you can do this. This is a great way to talk to your tax professional. So for the folks that are on the call that are self-employed, know that this is a great resource and a conversation you would want to have with your tax professional, that you can kind of see them on a quarterly basis, where they can kind of assist you with this type of thing. So keep that in mind. Let's see here. Tax efficient investments and savings contribute to tax advantage accounts like 401ks, Roth IRAs, and HSAs. Yes, absolutely. So this is another tip here that if you want to plan ahead and think about. So for the tax year 2025, if you do happen to have a 401k, or if you're interested in opening an IRA or health savings account, this is again a way to or not eliminate, excuse me, reduce your tax burden, ultimately reducing your tax liability and how much money you pay to the IRS. So what most CPAs or tax professionals will help you with is, all right, how much do you plan to contribute to your tax advantage accounts? And so ultimately what we're after is reducing your tax liability so you keep more money to yourself, and you don't have to pay so much in this year, which which your money works twice as hard because it's going to a tax advantage account. And a 401k, in most cases, it's tied to a market. It's the stock market, if you will, different types of investment vehicles that will give you returns on that. And those returns are tax deferred as well. So it's kind of a snowball effect, if you will. And so again, these conversations are great to have with your tax professional in more of a private, excuse me, in a private setting. But I talked a lot here. Let me just take a quick pause. Let me go into the chat and see if I'm seeing anything here. Alrighty. So we need some resources. Somebody had mentioned that they use an enrolled agent to file my tax returns. I see some resource sharing here. Awesome, awesome. I love it. I love to see the community. I love to see everybody here sharing some some resources. Let's see, I don't know how to make adjustments to my W-4 since they changed the form. So I think that's a great comment there. The IRS has that withholding calculator. If you are an employee, that's a great conversation to speak with your human resource department on those deductions. In some cases, you can self-serve depending on your employer and the size of your employer and the resources available. Some thank yous. Awesome. I see a question here. Could you please refresh my mind? What's the difference between a Roth and traditional IRAs? Which is the one that we can use to reduce annual taxes? Fantastic. Absolutely. Since we did talk about tax efficient investment savings, let me just quickly tackle that question. It's a very common question. What's the difference between Roth and traditional IRAs, and which one is usually better for me? So, a traditional IRA is pre-tax, meaning that, for example, let's say Alfredo, have a traditional IRA, and let's say I get my paycheck from Premier America. So, what I do, if contributing to a traditional IRA, which we call pre-tax, what that means is that the IRS does not tax my dollars that I put into the traditional IRA, meaning that it's tax advantage or tax deferred. Whereas a Roth IRA is what we call post-tax. So I pay the IRS the taxes on that money and I put it into a Roth account. There's benefits, strategies that involve both of these investment vehicles, but typically speaking, the way that I answer this question is really this: when does it make the most sense to pay taxes? Do I want to pay taxes upfront today in the present in a traditional IRA, or do I want to pay taxes or do I want to pay taxes down the road? I actually got that mixed up. Excuse me. Let me backtrack. Do I want to pay taxes today in a Roth IRA, or do I want to pay taxes down the road in a traditional IRA? So the idea really here is, where will I be upon retirement? And what I mean by that, my tax bracket. Do I believe that I'll be in a higher tax bracket down the road, or am I going to be in my highest tax bracket today? So if you're a young person, as an example, and there's some students on the call here, and you're investing in your education, and your salary will be greater down the road, you may be better off paying taxes today through a Roth IRA, because you're in a lower tax bracket today. And so some folks use a combination of both. Um, and so the one specifically to the question is which one is it that can reduce my annual taxes? Then it would be the traditional, because it is pre-tax. And essentially you're saving yourself, reducing your tax liability that way. With the Roth, you would still be paying. So thank you for the question. It's a great question. We've spoke on this topic quite some time, but I love the question, and I love the enthusiasm about learning about tax investment and tax efficient investment and savings. I love that. Awesome. So I see another question here, paying 30,000 freshman college deductions. So I don't have that on top of my head right this second, but I do appreciate the question. I would refer you to your tax professional there, because I know there are certain deductions. Really quickly to that question, there are different tax sheltered accountants, more commonly called a 529 educational plan, that you can work with an investment advisor or a wealth management firm, both which our credit union can assist you with. But this is more so on the planning side. If you have already been paying, you may qualify for certain deductions or benefits, but I would refer you to your tax professional on that one. Awesome. All right, next slide, please. Okay, so we got to the end of it here. Your questions answered. Let's talk. So drop them in the chat. We're here to help you with any questions you have about tax planning deductions or planning ahead for the next year. I know we kind of tackled some of these as we went, but I definitely want to, you know, Frankie, Francesca, did I miss anything? And please, while we have this conversation, drop any other additional questions in the chat.
We have all the questions covered so far. I'm just trying to find a updated link for a question in the chat regarding the education credit.
Awesome. Thank you. Thank you for doing that. And I appreciate your help and, moderating that and getting these resources out there. And as I mentioned, I love seeing these the community out here, sharing resources, conversating with one another and helping each other. This is what it's all about. And that's all what the credit union is about, is being, cooperative and assisting with one another. I did see something just come in here, separated, filed jointly or separately. I'm not sure if that's a question. If you won't mind expanding, I'd be happy to tackle it. While that comes in, I see something else come in. What's the common cost you think a person filing 1099 should pay a professional? That's a really good question. I'm so glad you brought that up because I want to talk to you about a service. Volunteer income tax assistance, VITA programs are all over our communities, especially during these times. So I really quickly want to talk about a VITA program because it directly speaks to cost. On average, and this is just, what I believe on average, I think most folks pay anywhere from $100 to $250 to file taxes. It depends on your on the tax professional, and it depends on the complications in your tax profile. But I will say this about volunteer income tax assistance programs, which they're all over our community. And if you're not sure, if you've never heard of one, just Google VITA program near me, and you'll find a lot of these places pop up. So volunteer income tax assistance helps individuals who make typically under $70,000 to file taxes, usually at no cost. These volunteer income tax assistant programs are a group of individuals who have been certified by the IRS to offer these programs and services. So it is geared. There are some limitations. I had mentioned that $70,000 threshold, um, and typically they'll be able to assist you if you do find yourself making a little bit more money than that. Then to the question that just came into the chat is, how do I find a certified tax professional? There are a lot of ways, right? As we know big store kind of tax preparers, as we'd mentioned, H&R Block, TurboTax, et cetera. And nowadays, you don't even have to go in person. You can just get on the camera, get on your phone or your computer, and have this conversation with your tax professional. But the idea is that if you want to talk to somebody in person, the volunteer income tax assistance programs are great. I highly recommend. I volunteered at one. I've went through the training program to help individuals, and for the individuals that are on the call that are at CSUN, specifically California State University Northridge, and a lot of universities and college campuses offer this, help individuals to better understand these topics. You can sit down and talk with somebody who has gone through the right training. They are certified by the IRS, and they are managed to the highest standards. And again, if you make less than typically, I think the income threshold is about 70,000. If you make that or less, they would be able to support you at little to no cost. In most cases, it's no cost. They would be able to support you and walk you through these processes. So I definitely want to just say, leverage that. I Here at the Premier American Credit Union, we're all about, paying little to nothing when it comes to financial services. Hence why we have a lot of services and products that help meet your needs. But thank you so much. I also see Francesca put in the CTEC verification tool. So if you are working with somebody and you just kind of want to, verify them, or somebody that you're considering, you can go onto that website there and verify their background, if they've ever had any problems, if you will, with the IRS in that regard. So thank you so much for those questions. I hope I was able to answer them. Let's go ahead and just give a quick pause here to see if any other questions come in on the call. We still have a little bit of time, so please feel free to share your thoughts, comments, or any concerns. Okay, so if something came in, I said I retired a year ago and I still have money in my IRA. What should I do now to avoid penalties for losing money? Thank you. That's a very great question. Without knowing, the other aspects of your personal finances, it's a little bit more challenging to answer that. I do know that individuals that are retired, depending on where their age is right now, they are what we call required minimum distributions, and there's really no way around to get those required minimum distributions that typically do charge us. Uh, um, the IRS will take its cut out of that, if you will, federally and both at the state level. That one I would refer you, outside of what I just provided, I would refer you to a tax professional just so they can get a deeper understanding and dive of where you are, and how maybe there could be additional ways to kind of help limit the penalties in paying taxes. Okay, I see. Yes, so I see another question. Thank you for the clarification. So it says the husband and I separated in college. FAFSA goes by one parent. Would a tax preparer know whether to file jointly or separate? Absolutely. They would be able better to answer that, and especially as they look into seeing who when I spoke about the head of the household and things of that nature, where does a dependent, if the college student is a dependent, um, where does it best fit in your financial situation? Absolutely. And Francesca, thank you again for putting that link in there about the qualified education expenses and qualifying for those education deductions and credits. Alrighty. Let's see. The education link doesn't work. Can you show the correct one, please? Alrighty. I wonder if you're referring to the one that just came in. Okay. So I think I see what's happening there. So, Francesca, when I click in, it says the host or presenter would like to open a website. I wonder if that's the challenge, but I was able to click through just the last one that you just put in. Um, I hope that that's working for everybody else.
Yeah, that's going to be the one for everything to do with education. And then if you're not able to access the link through the chat, we will share it out with an email in the coming days too. And if you just Google IRS education credits, it's one of the first choices that comes up too. And it'll branch off to some different landing pages about the different qualifications for the expenses, the different qualifications for the dependent, and just a bunch of information for you to view.
Thank you so much, Francesca, for that. And as she had mentioned, a lot of this information and the resources will be emailed out. And of course, this webinar is being recorded and available for your viewing and for anybody else's viewing at on demand, if you will. So I appreciate that. And Francesca, do we have anything else on the agenda today? How are we feeling? What do we think? Okay.
Yeah, just
So we
some closing remarks here. Um, so, Alfredo, if you want to take that first one about financial counseling services, and I can go over just some important links and resources.
Fantastic. Awesome. So before we close out, we're here to help. I really want to quickly call out one service that we offer that I wish more and more folks, knew about. So this is one of the reasons why we do this. We want to really quickly talk about our financial counseling services. So we have financial counselors that are ready and willing to help you and guide you through your financial journey in every step of the way. It's a very, very easy service to use. It's over the phone, one-on-one. If you do need some in-person assistance, there's ways we can do that as well. But definitely, we have a lot more coming down, and I'll let Frankie take over it for the important links and resources.
Awesome. Well, thank you, Alfredo, for the good information this evening. I hope everyone found it super helpful. Like we said, this recording will be shared out to you all afterwards in an email tomorrow, as well as any links and resources that we mentioned throughout the presentation and in the chat as well. And to stay in the loop for more events like this one, if you head to premieramerica.com and go to the webinars and seminars section, we add new events there. And if you scan the QR code on the right side of the screen as well, that will lead you to that webinars and seminars page.
Thank you so much, Francesca. Really quick, I saw one last question come in. I'm just going to take it really quick because I think it's a really good question. If you don't mind, somebody in the chat asked what to bring or prepare for a tax person. Great question because sometimes this can be a point of pain for a lot of individuals, especially if you're going to the volunteer income tax assistance sites. Is you definitely want to bring in your government issued ID. If in certain instances, they may even require your social security number, physical, if you have never been there, as an example. They may require to see it or a copy of it. So I would definitely give them a call ahead if you are already working with somebody, if it's needed. And if you're working with somebody new, more so, that's when you definitely want to ask. And of course, you want to bring in all your tax documents. So if you are a W-2 employee or a 1099 employee, you want to bring those documents. And any other documents that are typically mailed out to you. So if you do have mortgage interest, if you did make earnings from investment accounts, any of those important tax documents, and even if you think you may need it, and something in your gut's telling you, might need to talk to this about my tax professional, definitely bring it. So I hope that better gives you some sight to what to bring. But I definitely make a checklist, definitely the W-2, any 1099s, any other interest, bearing accounts that you may have that may be helpful to your tax preparer, and of course your government issued ID. And if you're working with a new tax preparer, they may, especially I know for sure in VITA sites, they will require your social security, card, not just your number, but the actual card. If you're working with a private entity, just give them a quick call and just make sure that what I'm telling you is what they need. And in some instances, they may not, or they may ask more. But I just wanted to quickly say thank you so much. We appreciate you. I'll turn it back to Frankie to close us out, and I appreciate that question.
Awesome. Well, lots of thank yous in the chat. Thank you all for your time this evening and for giving up an hour of your Wednesday to chat with us about taxes. Like I said, we'll send everything out that we mentioned in an email. And if you have any questions, feel free to reach out to us, stop by Premier America Credit Union, talk to a banker for any of your questions, or call into our contact center. But I hope you all have a great night. Thank you.